Welcome to the Capital News. I'm your host, Alex Karitis. Today is Tuesday, March 10th, 2020. Thank you so much for joining me. My apologies for being away for nearly a week. As you can probably tell by my voice, I've been fighting allergies or some type of cold, lost my voice for a couple days. But there's been a lot that has been taking place over the past few weeks, most definitely over the last week as well, and it's going to continue, which is what we have been discussing and have been forecasting here for quite a while. And now at least seemingly some of it is starting to come to fruition. So I wanted to take the time to make sure that I did a podcast this evening. I'm going to keep it shorter to sort of preserve my voice a little bit because I want to make sure that I have my voice through the remainder of this week and moving on, because I do believe next couple of days I'll be back to 100%. Hopefully that's the case. So again, my apologies for being away, but glad to be back. So a lot to discuss, but the title of today's podcast is The War for Oil. And I'm sure a lot of you understand what I'm talking about and what the crux of today's discussion is going to center itself around, because there's some geopolitical posturing here, because there was a failure over the weekend between OPEC plus Russia to come to an agreement, which markets, the oil markets, were hoping that there would be a cut in production, thereby potentially increasing the price of oil and potentially also the price of natural gas. Well, this didn't happen. This didn't take place. There was no coming together moment. There was no kumbaya moment. So instead, the major players, that being Saudi Arabia and Russia, walked away from the negotiating table and said, screw you, no, screw you. And now, instead of cutting production, there's going to be an increase in production, at least from the standpoint from Saudi Arabia, because there's only so much spare capacity that both countries still have. Russia is much closer to their peak production, okay? They can only produce so much more, and then that's it. They're tapped out. Saudi Arabia, on the other hand, they have the ability to ramp up to a couple million barrels of oil per day. And that's what they said they're going to do, that they're going to up their production by about 2 million barrels per day. That's staggering in a global environment that is already awash in oil and in natural gas. I mean, basically what's going to happen here is every place, every nook and cranny where you can store oil and natural gas, it is going to be filled. We're going to be at peak capacity here, okay? There are huge ramifications for this. First and foremost, we saw the futures markets for oil trading over the weekend plummet by 20+%. Okay, and that of course carried over to the cash trade on Monday morning. And you're looking at WTI at $30 a barrel, even trading below $30 a barrel. And you have projections from a lot of people out there, a lot of macro investors that I follow, and even some of the big banks have put out warnings, or at least some notes, even from Goldman Sachs, saying that oil could stay in the 20s. It could even hit $20 per barrel. Now, the question remains, when will that happen? Will it happen? And if it does happen, how long will it remain at that price point? Okay, this is a point that we have been discussing here on this podcast for quite a while because it is a risk. Typically, when we go down and we talk about oil, what do I always remind this audience of? You better be careful with the price. Where is it? That's why I talk about it. Because here in the United States, we have so many oil and gas producers that have so much debt, and so much of this debt is coming due over the next few years. They have to continue to pump because they have to continue to sell a product, because they have to continue to service their debt. Amongst operational costs as well. It's the whole gambit. So now, they were struggling before, when it was in the $40 range. Even at the $50 range, okay, depending on who you are, you can still make some money. Of course, you're still there, continue making some profits, or at least enough to stay afloat. Not too much movement in their bonds, nothing like that. Now, a lot of these bonds are paying pennies on the dollar. They're worth pennies on the dollar. And this, of course, just took place over the past couple of trading sessions because of what has taken place in the oil markets. So investors are starting to get jittery. I mean, you've had share prices plunge, 20, 50% depending on the company. There's virtually no end in sight. I know a lot of pundits on the mainstream media, financial mainstream news, they want to come out and say, well, how long can this last, thinking that it's just going to be, okay, a couple strong guys here in Saudi Arabia and President Putin. Okay, two strong guys sitting around a poker table. Okay, are they bluffing? Are they calling each other? I mean, neither one of these guys are going to fold. They're not going to blink at the first major sell-off in oil prices. Do you think they didn't know what was going to happen? This is what they knew was going to happen. There was going to be a major drop in the price of oil. No ifs, ands, or buts about it. This was the given. Now the question becomes, what's the next step? What is their ultimate game plan? How long are both of these countries in particular willing to let this continue? That's the ultimate question. How much pain are they willing to inflict, perhaps on their own economies, but also on that here in the United States with the oil and natural gas producers? Because Saudi Arabia and Russia can produce oil and natural gas cheaper than what a lot of these smaller and mid-sized companies can here in the United States. So this is basically a death by 1,000 cuts. Now, what we witnessed a handful of years ago in the mini recession, which was pretty much triggered again by an overabundance of shale and a bunch of companies that went under, but some of them were saved. A lot of those companies were actually saved a handful of years ago by private equity. Okay? But 5-6 years ago was a completely different story compared to where we are today. Completely different environment. So the question remains, private equity, yes, they still have the cash sitting on the sidelines to come in and, again, quote unquote, bail these guys out, offer them loans. Of course, it's not going to be friendly. It's not like, okay, yeah, we're just going to give you 1%. Oh, no, it's going to come with a huge fee on it, a huge yield. But they do have the potential to do it. I don't think they're going to. Now, of course, there's going to be a few one-offs here or there that the private equity guys are going to eyeball and say, yeah, there's some real value here and we can make a good penny from them. But the bulk of the marginal players, the small guys, the mid-size, they're gone. They're gone. In my mind, there's no ifs, ands, or buts about it. Okay, I was already of that mindset before this took place. The spat between Russia and Saudi Arabia. And that's another question. Now, I don't know. None of us were in that room. None of us were in any type of back room. None of us were in any type of penthouse in a hotel somewhere where you've had officials from Saudi Arabia and Russia. None of us were in those rooms. None of us was a fly on those walls listening what was actually taking place, because as the media would have it, this is a big fight between Russia and Saudi Arabia. Or is it? We don't know. Maybe this is a joint venture between Saudi Arabia and Russia to go after U.S. producers. Could be, because let me tell you something. Regardless of what's the case, if this is a spat between Russia and Saudi Arabia, or it's some sort of alliance between Russia and Saudi Arabia, U.S. producers still suffer the consequences drastically, regardless of what's the case. So you always got to look at who benefits, who gets hurt, follow the money. What's the end result here? Okay, so is it possible that U.S. oil and gas producers are some sort of collateral damage? It's possible, but I think it's too big of an elephant in the room for it not to have been thought of by either party. Get what I'm saying? So if it's collateral damage, it's very convenient collateral damage to both parties. So that remains to be seen. We might never know what those backroom deals were about, if there were any, that type of thing. But regardless, this is going to have negative downstream effects for U.S. oil and gas producers. There's just too much debt, folks. We talk about it here all the time. And if we have this continuation of further price deterioration for the price of oil, and natural gas has already been low for so long, how are they going to make any money? Simple answer, they're not. So how are they going to be able to pay off their debts? Simple answer, they're not. You already have capital expenditures being cut in this industry. It's just a matter of time before you start seeing hours worked reduced. It's just a matter of time before we start to see the layoffs. This is going to affect several states. This will affect Texas. This will affect North Dakota. This will affect New Mexico. And this will affect Louisiana and a couple other states. Pennsylvania, Ohio, a little bit, not to the same degree as those other ones previously mentioned. But this will have big ramifications moving forward. We have an election year. We have a president who has touted himself and his record for being energy independent, removing taxes, removing regulations on these industries so they can produce more, bringing jobs back to mining, manufacturing, etc., etc., etc. Well, if they're not working, he's going to have a problem politically speaking. Now, this is all on top of the coronavirus, COVID-19, which was already bringing additional downward pressure on the price of many commodities because of the demand side. Remember, COVID-19 is not just a supply shock, it is a supply shock and a demand shock. So the trajectory was already to the downside for many, many commodities. Now you add on top of this oil war, well, now it's a double whammy. And I've stated it here many times before. I don't know what the catalyst is going to be to burst this bubble. Perhaps it already is. Perhaps it is COVID-19. Very likely could be. And I don't necessarily know the order of the dominoes, but I know the dominoes are set, and I know what the dominoes represent. It's just a question of which one tips over first. And once it does, it's going to have a huge cascading effect that's going to touch virtually every industry and sector in this global economy. This is big stuff. This is not something that is going to go away anytime soon. I don't imagine that MBS from Saudi Arabia or the president of Russia and Vladimir Putin, I don't think they're going to blink anytime soon. I don't think either of them are going to give up. I don't think either of them is going to cry uncle anytime soon and come back to the negotiating table. I mean, it's only been a couple of days. It's only been a couple of days. And I am of thought in mind that we very well will go back below $30 a barrel on the price of oil. Again, the question remains, when and for how long will that remain? Now, an interesting thing that I came across the other day, because clearly in Russia and in Saudi Arabia, oil is the breadwinner. Oil and gas are the breadwinners. Both of those economies are highly dependent on government revenues to finance the economy, basically. It's really not a free market capitalistic system over there in Russia or in Saudi Arabia. The government has a big say-so, and a lot of that money, of course, is derived from their oil and gas reserves. Now, something that's interesting, it is cheaper for Saudi Arabia to pump their oil and gas in relation to Russia. However, from a break-even standpoint, in relation to their fiscal budgets, Russia has the cheaper break-even or the lower break-even cost as opposed to Saudi Arabia. So what I'm getting at here is, how long can these guys wait it out? That's the point here. You've already had the finance minister of Russia come out and state, if oil is in the price range of $20 to $30 a barrel, Russia, we can sustain this for 6 years. 6 years. Now, of course, he could be lying, he could be exaggerating a little bit, but nevertheless, even if you cut it in half, they can last a few years, which is probably true, by the way, because what Russia has been doing, and we've been talking about this as well, is they have been building up their gold reserves. They've been building up their gold reserves. So, yeah, okay, oil might take a hit, but what's gold going to do? What's gold going to do over the next couple of years here? It's probably going to go up, folks. Quite sizably. Excuse me. So, okay, well, they take a hit on oil, but their reserves are boosted when it comes to gold. What took place over this weekend, I have to stress this. This was not an accident. This did not just happen. This was not a knee-jerk reaction. This was not an ego contest. This was some sort of strategic play. Again, it could be Russia going after Saudi Arabia going after Russia. Could be either one of them coming after the U.S. with our U.S. producers. Be a combination thereof. But this was no mistake. And understand that, because this is important. This is geopolitics. This is global economics. Get used to it. Get used to it. And this is going to have huge ramifications as we make our way through the remainder of this year. Because the other thing that you have to understand, this doesn't just affect the countries we've been talking about. This affects all of the other countries who are highly dependent on oil and gas. And a lot of these countries are already the same countries that we talk about here all the time when it comes to the global protests. Now, what do you think is going to happen there? You think it's going to get better or worse? Probably going to get worse, because if people can't work, if they can't continue to produce, if those governments can't get the revenue that they need to sustain their budgets, what do you think is going to happen? This is just going to compound what we have always seen. And if you're of the mindset that Vladimir Putin likes to sow chaos, likes to make sure that he doesn't miss an opportunity when chaos is in existence, well, then this is what he's doing. Because you're piling on top of COVID-19. He is piling on. That's why I'm saying this is a huge issue, something that needs to be focused on, and we need to pay attention to. So, a lot we got to get to in the remainder of this week, but I want to make sure I save my voice. I'm going to talk about the Democratic campaign, because it looks like Joe Biden is going to be the nominee. Coronavirus, because that remains front and center. There's a big messaging issue, when it comes to this White House and other governments around the world. So we're going to talk about that, going to break down some of the numbers, where we're likely headed. Does this make sense, the numbers that we're seeing? And then with all of this nonsense, with COVID-19, with the oil war, with the market volatility that we've been witnessing, there's a lot of talks for more monetary easing. Can't believe it, but not surprised. Fiscal stimulus. So we're going to talk about bailouts. We're going to talk about socialism, all these types of things, because it's all coming together. And do we want to pay for it? Is this the right solution? So we're going to talk about a lot of the problems, and I'm going to provide a lot of the things that I think are the proper solutions for handling this. So I'm glad to be back. Thank you so much for your patience, and I hope you're back with me. And hopefully I'm back tomorrow. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.